millions of British workers are paying into pensions that mathematically cannot deliver what they need. A new report found that 3/4 of UK workers won't reach what experts call a moderate retirement income, £32,700 a year for a single person. Only 23% are on track. The gap isn't accidental. When the UK introduced auto-enrollment pensions in 2012, the government set minimum contributions at 8% of earnings, 5% from the worker, 3% from the employer. That rate wasn't calculated to fund retirement. It was calculated to be affordable for businesses. The minimum became the default, and roughly half of all workers contribute nothing beyond it. Here's the arithmetic. If you start saving at age 20, you'd need to set aside 10% of your income every year until 70 to hit a moderate retirement. Start at 30, and you need 15%. Most workers are saving 8. Meanwhile, the UK state pension pays just £12,500 a year, 20,000 short of moderate. 15 million people now face what the report calls a cliff edge. They'll reach retirement age without enough money to cover regular holidays, car replacement, or meals out more than once a month. U.S. stock exchanges experienced a sharp sell-off following regulatory approval of perpetual futures trading, a development that caught investors off guard and triggered market volatility. The approval allows continuous crypto-style futures contracts to trade on traditional exchanges, marking a significant shift in market structure. Trading activity reflected heightened uncertainty as institutional players reassessed risk exposure. The sell-off signals investor concern that perpetual futures could amplify market volatility and introduce crypto market dynamics into traditional finance. This approval reflects regulators' growing willingness to blend conventional and digital asset structures, potentially reshaping how markets operate and how risk is managed across asset classes.